What's going on, everybody? My name is Jason and I'm here with X91Investing. In this video we're going to be talking about support and resistance. So yesterday we went into trend analysis. So in the previous video it was all about trend analysis, trend identification and all that, which does incorporate bits of support and resistance. So that's why this is the next video that's coming after that one. Because this one is as important, if not it's even probably more important. I know in the last video I said trend analysis was probably the most important part, but this is key to any form of a trading strategy. Understanding support and resistance levels, how to draw them, the whole lot, everything's going to be covered in this video. So let's hop in. Right, so we're over here now on the Microsoft whiteboard again, like we were yesterday for the trend analysis video. I've changed up a few things a little bit. I have my little bar over on the right hand side with the pens and whatever. Kind of irrelevant, but whatever. Right, so basically when it comes to support and resistance, when we were talking about trend yesterday, right, in the previous video, we were talking about uptrend, downtrend and sideways trend, right? That kind of looks like upwards trend again, but sideways trend. Those lines on the trend, when we plot a trend line, it's technically either a support or a resistance. And when we're talking about an uptrend, we're buying on the lows of the trend. We're going to go long from those positions. So we act off of the support of the trend, right? We operate, I'm used to using the thing down on the bottom from like the streams and stuff, so just bear with me a little bit. I might be looking down trying to find stuff. Oh, it's over on the right hand side. But so when we're in an uptrend, we're plotting the lines. Just a quick little recap, because it is important. We're going to be buying or going long off of these points, right? But in the downtrend, it's the same thing. When we're going but we're going short off of the highs, and we're using resistance. So this is support here on this line, and this is resistance here because it's coming up. Remember, we're talking about the ceiling and the floor. There's resistance at the ceiling, there's support at the floor. So that's the kind of way we need to think about it. So that's the little quick recap of what's important. Why won't this delete? That's an odd one. See if this will get rid of it. There we go. So what I've drawn here is a potential price chart over time. Plain and simple. It's not picked from anywhere. I just started drawing lines, and just the grid kind of helps keep things a little bit in check. You're obviously going to have like each of these little movements to the upside or to the downside. They're all broken up. Say like this section here could be broken up into and then it could come down and up and down and up. It's like with a candlestick. We'd be going into candlestick analysis in the future. I have the shape automatic thing on. I don't know how well that's going to work. But this whole price action, this could be one day of price action, but it could be loads and loads of candles going up, and then a candle coming back down, and another candle coming up again, and loads of price action. So this line isn't necessarily all going up. But that's just a brief little recap on various little bits that are quite important to this video. So what we're looking at up here is it's just it's just a stripped back basic line chart, just for point of an example, and we will get into the video an actual live action price chart as well, so with actual real data on it. So we're gonna I'll take a pinky color just because it's different from whatever else is on the screen. So what we have here is price fluctuating around at levels, and when we have price come up to a specific point and price returns to that point, it creates a level where, as traders, we interpret that as, oh, there's resistance at that level if it's price coming up and it's kind of struggling to break through a level. I feel I've kind of gone through this a little bit in the last video, so I won't go on too much on it in this one, but it is very, very important. So when price came up here to this level, but price came up here to this level again, that creates a level of resistance. And the more times price comes up to a particular level, it strengthens that level. That level becomes considerably stronger and stronger and stronger. So we see here we have a touch here and we have a touch here. That'd be a quite, it's like if it comes up to a point, we could say, okay, there's resistance at this point, and price comes up to here the next time. We say, yeah, it reacted because there is resistance in this zone. We now turn that resistance into a resistance zone. There's resistance at this level, but now we know, okay, it's in this zone is where the resistance will find resistance. So that's where the rectangle tool on the trading view, it does come into play. But what we're seeing here is we're seeing resistance. So there's two touches. so to a resistance. So the price came up and came down, came up again. We know there's a resistance level. The bulls are struggling to get through that point. Same thing here. The bears are struggling to push down past this level. The bears are struggling to support, or they're doing well at supporting the price. The bulls are doing well at supporting the price, and they're not leaving the bears push down anymore. The bears are controlling the bulls in this location here, where they actually can't push the price any higher. So it's a constant battle between the bulls and the bears, and that's the reason it's used so much. Bulls and bears, they're just constantly in conflict with each other. What we see here is a breakthrough. And basically what that means is the bulls that were trying to keep the market up were completely overwhelmed by the bears, and the bears pushed the market down, right? And we see a breakthrough here. But what you need to watch out for is false breakthroughs. And false breakthroughs are every trader's worst nightmare. And they can be controlled by banks, like we went over in the last video. The banks can actually, and we went over this in the live stream on Sunday, so I'm recording this on Friday. So on Sunday there's a live PMA session. There's invaluable information that comes out that's not specific to any specific type of video. It'll be just relevant to the topic that we're talking about. So a false breakout is when the price breaks through. So we have, say there's a support level here, and we have price coming and boom, and it comes down and misses it, but it breaks through, right? That's a false breakout. It broke the resistance level, but it didn't break and continue, right? And I'll be bringing out a video in the future when we cover more of the basics, how to avoid falling for false breakouts. Because what banks can do is, when banks know that the market is going to pick up, and like nowadays when we have the COVID pandemic and whatever, a lot of banks are feeling bullish on economies, like the economies are going to crash, and there'll be a point where they'll say, okay, this is the kind of worst of it. They're like, especially when it comes to recessions, there'll be countries will be saying, right now, this is the time for the banks, because a lot of people are kind of losing faith and whatever, and they're just getting rid of things they're holding, and banks are really trying to pick up on stuff. So when it comes to different times like that, what banks can do is, when we're trading, we're going to be trading off at this support level, right? We're going to have limit orders at these levels, because we're expecting price to come to that level and bounce off it, right? Like a ball, drop a ball, hits the ground and comes back up. That's what we're expecting. But what the banks sometimes do is they have to load up, and we went over this on Sunday, so tune into those sessions. I know I keep plugging it, but that's where there's a lot of kind of random 2 cents of information. So what happened here, say just for example, is a collection of banks all came together, and they all said, right, we're going to pick up on orders here. So what they do is they sweep out. They start buying here, and the bank what happens is it drives the price down below, so all the people start to panic and they start selling off. That's how the banks get to pick up all their orders. People panic and they panic sell, and the banks get to pick up all their orders. And when the banks they take in all the supply, so there's now huge demand with very little supply, so the price flies up. And that's when people say, oh, every time I take a trade it dips and it hits my stop loss, and then it goes the direction I predicted. That could be one of the reasons. There could be a bank coming, or it wouldn't be one bank, but could be a collection of banks all in cahoots with each other, all communicating and basically discussing, right, we're going to do it here on Thursday, and Thursday for the next 2 weeks we're going to be picking up orders and whatever. So that's what could be happening. There could be a bank or a collection of banks coming in and sweeping out. But when it comes to a breakthrough, we need the price to break below, come up like we have here. It came back, so it broke down. I'll magnify this a little bit just so we can see it. Right. So we'll plot our support level, and we'll just do two touches, but the price broke, right? This doesn't mean anything. This doesn't mean that the level was broken. But what we need is a retest to confirm it. If price comes here and it can come to here and struggle a little bit and then break through again, which that would be considered a false breakout because it didn't break into any other kind of a trend. So what we could say about this is, if this came to here, we have a high here, we have a low here, we have a lower high. If you have to go and watch the video to understand this properly. We have now created a lower high. When the retest happens, that's when we are confirmed to be now in a downtrend. It's not necessarily off this. When we go along, if we come down to here, this level, and we retrace back off it, and we bounce and we go back up through. We're not creating the downtrend. This is telling us that there could be a downtrend potential, and then when it breaks and creates a new lower low, we are officially after changing direction. That's what you need to watch out for when it comes to false breakouts. That's very, very brief. I'll be bringing out another video that goes much more into depth with it, and a lot of retail traders and new traders actually struggle a lot with it. So right, we're not going to leave this drag on too much further, and we get onto the live charts. So price came down, retested. The R here means resistance, not retest. I have retest written here. So there's a retest of that level. So it's been support in the past. Support was broken, so we've had just a break of support there, and it's come down through, created a new low. There's a new low there, so there's a new low in this location. There was a high here. There's a new lower low, right? It's created a lower low because this low is lower. This low here is lower than this low, so it's a lower low, and it's essential that you watch the last video. So if you're after getting this far and you haven't watched the previous one, just go back, watch the previous one, come back to this one. A lot of stuff will make more sense. So price came up, touched that support that has now become resistance. So lines of support that have previously acted as support can then begin to act as resistance. So we've had support where it's supporting underneath, but when price broke below it, it can now use it as resistance because people have seen that there is price action that reacts at that level in the past. So what's happening here is the price came, retested, created a new low. So people could have been thinking, oh, downtrend. So things are going, and people would have by just saying, okay, it's coming back up here. There could be a double top. You see here I have that's the eraser tool. You can see here I have a double bottom here. So people could say, oh, down, oh, double top. It's coming back down again. So people caught this, but then when they saw the price got to this support level, people could have been thinking, oh, double bottom. That's a reversal pattern to the upside. So people would have been thinking, oh, buy here. Because there's no particular trend after been established yet, so people will be trading here and there between different mentalities. But price came up, people with limit orders might have been here ready to go on the sell train again and pull back down to the downside. But what happened? Continued through. This is why entry reason is a big part of a trading strategy. Hopping in here just because it's at a support level is not enough to get into a trade. You need your entry reason. You need a solid reason. We'll be going over strategy, how to do a strategy and whatever, and over on the Patreon we'll be able to actually formulate strategies one-on-one if you want, or as a group we can actually discuss different strategies and all that kind of stuff. So hop over onto the Patreon, check that out. There's different tiers, see which one suits you the best. Back to this. Price broke through, so it's similar to here. We had a breakthrough, so you have to have your entry reason to enter. There might have been a bullish engulf in here. There might have been morning star, evening star, something to signify that there's an opportunity to buy in this location. It could be, but typically, just because it's a break of structure, this could be a false breakout again. Remember, false breakouts, we could have bought here, price would have might have been getting a little bit of momentum. You say, yes, I'm nailed that trade. Oh no, I'm all red. Take out your phone. I'm €60, and then you're there and you're like, oh, that wasn't good. So you have to watch for the false breakouts. Watch out until price comes up, it has the level and retraces back, comes back down to the support and retests. We have now broken out of this channel here. That sideways channel is over. We've had a breakout with a retest. That doesn't necessarily mean it could go up, retest this level and break down here, break down through again. But we have just confirmed that it's not in this trend anymore. It'll have to re-enter that trend again to be able to be in part of that. So price came up, hit the level, retested, and it blew up. So people might have been here, they might have bought here, sold off here, grand, but price continued on up. So like a lot of people that might have taken a trade here, this isn't real data, but a lot of people that taking the trade here would be taking their profit here. But the clever trader might have a take profit 1 and a take profit 2 at the previous resistance that was created before. So one of the traders might be, oh, take profit 1. My take profit 1. I actually don't take profit 1. I move my stop losses to break even. So I entered here. My stop loss was here. I moved my stop loss to break even. So now this is a no risk trade. I've eliminated all the risk from the trade, and now see how it goes. Price can come back down. I don't lose anything. So this is all part of trading strategy. We'll be getting into it in the future. But right, that's enough. I think I've covered a lot of it. It's same thing, up, over, hits resistance, breaks through, comes, retests, goes, breaks, and comes to the previous height here. So we have a higher high here, higher low, comes along, breaks, higher high, all this from the previous video. So look, we'll hop over to a TradingView chart and we'll just have proper live action price data to look at. So we'll head over there now. Right, so we're over here on TradingView now, and we'll just pick up a forex chart. We'll hop over to cryptos. We'll hop into major forex, and we'll go for GJ, right? Great British Pound against the yen, right? So basically, this is a good. I've taken a good few nice trades on this in the last couple of weeks. So this might be a very good one to have a look at. So right, we're here on the 1 hour chart. This is not a great way to look at a 1 hour chart, in all fairness. So look, we can see that with the last couple of months there's been a massive bull run, and there's been a lot of long trade opportunities on this particular chart. So what we're looking at here is, so what we do first of all, we scale the chart back when it comes to drawing support and resistance. So when we scale a chart back, we can see loads and loads of levels, right? And you need to be able to understand what levels mean nothing, what levels mean a lot, and various things like that. So when we look at a particular, say, take from 2017 until 2021, right? We have a lot of there's been a lot of price movement in that period of time. So we'd stretch out the chart because it's easier to spot them rather than if we have it like that. So we'd stretch it out a little bit. I'll actually turn off that volume indicator because it's fairly irrelevant for this video. So we'll put it back to the 2017. So what do we see, right? So when it comes to plotting support and resistance, there's two things you need to think about, right? Relevancy and recency, right? Recency, the more recent the level, the more of more influential it will be over the chart. So we see one here from 2018. It's going to be more significant than this one here in 2017, right? So in TradingView, I would definitely recommend TradingView. It's definitely, and even if you go for a paid subscription, it's very, very cheap. If you're, it could be a day's worth of trading would cover your month of TradingView. So it's not very expensive at all. So you have, say, right, the way I go about plotting support and resistance, a lot of people flood their charts, right? They come here and they put on the magnet, or not the magnet, the keep drawn mode on, right? And they just go, boom, oh, there's a level, oh, here's another one, oh, here's another one, here's another one, here's another one, oh, there's one, there's one, there's one, there's one, there's one, there's one, there's one. Look at the chart. The chart's a complete mess. I'm going and I'm saying, oh, okay, came up to here, oh, level here, no, nothing happened there, oh, what? And I just confuse myself. Like, I don't need all that data. So I plot the key support and resistance levels. So I remove the drawings, right? I zoom out and I scale up to a daily chart because I'm a day trader, so I focus on the daily time frame. I focus on the hourly time frame, but for me the most relevant one would be the daily chart. So I see here that price got up to this level, so like, look, you have a bit of a retest, price getting up to that same level again. See, like the whole way along here, look, price broke down, came up, hit that same level. So what a lot of people do is they trade by putting down these lines, and I use those for key levels, right? So if there's a very, very key level, say 140, right? So 140, there's a key level, right? We can see here it's constantly being reacted to. Look, price is coming, consolidating on the 140, coming up, breaking, look, coming up, meeting resistance, breaking through, coming, and it's very indecisive at 140. So it's a good idea to have a big line at 140, maybe at 150 again. But what I like to do is I like to use rectangles, right? And I like to take the border off the rectangle. So if you go in and you open the rectangle settings, you can go into the style, and I can take the border and just make it completely opaque, or completely transparent, sorry, and change the color to whatever, right? So when I'm drawing a support or resistance zone, so like we take this zone, this is a fairly key zone. So what I used to do is I used to plot it using control on the computer. So holding the control key when I draw it to plot it to a specific level, but like it's not exactly going to hit that exact down to the pip. It's not going to hit that specifically, so you don't really need to be dead accurate with them. But it's very, very important to plot them to the key levels. So like we have a key level here, right? We had a key level down here. With terms of price, this can sometimes get in the way. It's a little bit annoying sometimes, but we can plot them based off of that, right? So we saw that the price came down to this level. This probably wouldn't constitute a box. A box would be more short-term kind of trades. So a line would definitely be more important, at these kind of levels. So look, we're talking about 125, so 125 yen to the dollar, kind of level, 140. Support and resistance. And price tends to react. Price tends to react at support and resistance levels, and sometimes support and resistance levels actually happen at key levels of price. So like rounded numbers, when you're talking about stocks, you'd be talking about, if they're kind of cheaper stocks, you might be talking $10, $15, $20, $25, $50, $100. Those round numbers. When you're talking about penny stocks, you might be talking about 25 cent, 50 cent. When you're the rounder numbers, if you get me. And the same thing with cryptos, like Bitcoin. If I show you my Bitcoin chart at the moment, you'll see. So like I have the all-time. This is actually not the right chart. Actually, no, I don't even think I have it loaded on this. I don't think so. Yeah, see here. This is the PMA chart. That's where I have it. So I have 60, 55, 50, and 45 all marked on the chart in a hard dotted line. Then when I go in and I scale down the chart, I can see then where all the levels are. But then I see, in this zone here, I have resistance, right? And I mark a resistance in red because you're shorting off a resistance, right? And I mark, say, this area here, very, very key at 45,000. You have this key support going along here. Doesn't have to be exact, right? But we know price is reacting at this level. We mark it. Price is reacting. I mark support in green, I mark resistance in red, and consolidation I mark in orange. So if I see consolidation, say just take this little area of consolidation here. So when we go into sniper entries, consolidation is very, very good for sniper entry. It's a key part of a sniper entry type strategy. So we'll just see, look, there's consolidation here. We plotted off the first high. So say the first high here, the first low. Okay, we see price came down, tipped it, didn't retest it, didn't break out and retest, didn't break out and retest, it broke out but didn't retest, and whatever. But then we see this continued on, price broke out but it retested, price broke out, came back down, and it retested and carried on, right? Carried on, met resistance at the 50, and blah blah blah. Right, I know we jumped over to the Bitcoin chart, but why not? It's all these things work on everything. We can hop over onto stocks. We can hop over into my major stocks. We'll take what am I liking at the moment? We'll throw on Netflix and see. Not the actual. We won't throw on a show, but we'll throw on the chart for Netflix. So we'll hop over onto the daily chart, and we'll have a look. So look, obviously, straight away I see consolidation. We see a lot of consolidation. Well, all I'm doing when I'm drawing these to get a kind of a more accurate and clean cut rectangle is I'm just holding control when I'm grabbing a point, dragging it over. So when I hold control, it activates the magnet tool down here. The magnet tool. So there's the strong magnet and the weak magnet. So the strong magnet tool will activate, and it'll snap to the various points. So we see, look, it came up and it met resistance in this level, and it pushed back down off it. Met support coming off of these previous ones. I use trend lines, hold shift to draw a horizontal trend line, and just for short little, or maybe in a couple of hours if there was a little bit of price action or whatever. But price came, see, look, it met resistance from this point, met resistance here off of like this box is showing support that came from the resistance from this level. So when price came up, it was actually coming down to the level of roughly around here and here, and it was reacting. Like this is the power of support and resistance. You could be picking up a trade here, waiting along here, and the whole way along, and that's how you can benefit from support and resistance. Trend as well, with the trend lines. The whole thing about trend, you could be shorting. You could be, say, like if we take this, this isn't technically a good bullish chart or whatever, but we could have taken a trade here, left it run for a couple of months, came back down, like we could have had it come up to this level, look, straight away. Look, price came over. We could have said we could have set our long trade here, bullish engulfing. Straight away, you can see it. Oh shite, excuse my language. So we can come. Can't really control it when you have the thing open in your hand. So we can see bullish, not really a bullish engulfing here. We could have gotten in off of. Not the only reason for getting into a trade, by the way, but that could be it. We could have our stops below there, and we could have had our take profit right up at that level. I wouldn't put it exactly because, what way is the chart? So it hasn't been bearish, hasn't been really bullish. It's been kind of, in the same region for the last couple of years. So, no real reason for being a little bit bearish or whatever on it. So yeah, you could nearly target that level altogether, and you could stretch that trade on for as long. That could be a portfolio, added to your portfolio, or you're holding it for a long time. Could be like now, some people are holding airlines, people are holding Bitcoin, people are holding loads and loads of different things like that. So it could be a long trade. You could have been really bullish, like say from 2020, right? Everyone's sitting at home, lockdown, Netflix. Look what happened. Just lockdown came in, right? The initial crash, stocks crashed in March, April last year. End of story. But the big return, Zoom, Netflix, all these different, Microsoft took a nice pull up. Tesla obviously took a massive drive up the way. AMD did, Nvidia, most of these stocks here are all 2020 bulls, mostly. Then we have a few. Cost was the meme stock that everyone forgot about, and everything that goes with it, right? So that's really the basics of when it comes to support and resistance. They're just key levels that price reacts at. That's the main thing you need to take from this. When price gets to a level, it's either going to hit it and return, it's going to hit it and consolidate at it because it won't know what to do. It'll hit it and it'll break through it. It can hit it also, consolidate and break through, hit it, consolidate and come back down. It doesn't necessarily have to react straight away. But it's not something that you will just formulate a strategy off of. It is a key part of a trading strategy, but it's not necessarily the strategy, if you get me. So this, combined with your trend analysis in the last video, gives you a great foundation for how to actually start thinking as a trader, and how to really understand what means what, and what actually means something. When it comes to plotting support and resistance, one thing I actually wasn't told when I started, and I was a little bit hazy when it came to plotting support and resistance, was, do I go to the high? Do I go to the close? I plot them off the highs, because price, just because it's not in the body of the candle, doesn't mean it's any less significant. Literally, the body of the candle only means that is when that's the start of the hour and the end of the hour, or the start of the 4 hours and the start of the start of the 4 and end of the 4, the start of the day, the end of the day. That's all it means. Price, you could see a candle that looks like this. Alright, we'll just get this up. I'll just get my little tablet back. Really handy for doing this online stuff. So you could have a candle with a really small body with enormous wicks, right, on a daily chart. So that means something, obviously. But you can also have a big blocky candle with very small wicks. So just because it's a wick doesn't mean it's any less significant than the body. And that is one of the biggest lessons I learned, and it was something I wish I learned when I started trading, because oh my god, you start drawing support and resistance levels so much better when you start thinking properly when it comes to this. So what you really need to remember is draw them off of the highs and draw them off of the most relevant ones. So relevancy, so recency, and then the most considerable levels. So like with the Bitcoin, you have the 60, the 55, the 50, the 45 going down. You need to remember to plot them. Don't plot 500 levels, just 5 or 6 at most would be my opinion. When it comes to forex trading, we'll open a forex chart again. Like you can see here, like I plotted this off of a previous zone here. We're we're finding support off that level. Price broke down, came back up. Price came along, bounced off it, broke down, came back up through it, bounced, and bull run, right? There's a lot of things you can take from just spending these little few minutes that we've had there together, looking at a chart. I don't know what all this green is on the chart here, whatever it is. It doesn't look nice. So yeah, this is the basics of support and resistance, and as you develop your skill set as a trader, support and resistance would be second nature. Like at this stage, like I can hop onto literally any chart and just boom boom boom, like we can see key level. Like I'm not going plotting these levels of support. I'm a day trader, I don't care about these levels down here. Price is up here, I plot two main ones, the two main ones of the range that we're in at the moment, and then the key levels within that. Plain and simple. I'm not plotting all these levels out here because that's not going to be completely insignificant at this point in time. Price comes down and breaks here, I'm looking for all these levels down here. All the levels, what's key in this zone between these two lines when price breaks here. Price breaks above here, I'm looking at these levels. Plain and simple. Don't bog yourself down in ridiculous amounts of, just confusing yourself. It's just not worth it. So look lads, we're going to wrap this up for today. I hope you enjoyed. This is another video 2 days in a row, so I'm going to keep up consistency as much as I possibly can. I have a busy college schedule, and I'm actually late for a lecture now at the moment because of this, but it's definitely worth it. Definitely want to pursue somewhat of a hobby in teaching people how to trade and possibly even turn it into a career at some stage. So look lads, thanks very much for everything. Leave a like, tell me what you think of the videos, tell me what you think you'd like me to talk about in the next one, whatever. Subscribe, you'll get, and turn on the bell so you know when I'm going live. In case you forget, you might say, oh, X91Investing going live in 20 minutes on a Sunday at 7 p.m. Don't forget about that. That's probably the most valuable thing you'll get at the moment as part of this channel, other than the videos obviously. So look, thanks very much for watching, and I'll see you all again soon.